Hello, what is a realistic monthly return on swing trading? March monthly profits from swing trading. So for the month of March, we made $2,400. So we are going to go through different reports to show the details, just to give you an idea what to expect when you are swing trading, at least at the beginning. So it's good when you are swing trading to do your daily trade recording, and the way I have found it to be useful for me is to have the sales on one row, and when I sell that stocks to have the purchase on one row, and when I sell the stocks to have the sales on the same row as well. And from that you can just pull different reports, especially if you are designing your own spreadsheets. You can pull your own report from it. So if you look at few trades in March, the one that I selected right now, we have 7.52% return on it. The next one, we have 3.71% on that, but before it we have 9.65% return, and the return is here, and the return is calculated simply by taking the profit divided by how much we pay for it minus the fee when we sold it. So for that particular one, for instance, we combine long option and swing trading strategy with short option and swing trading strategy. So we bought it in January and we sold it in March. But then on the 24th of March, we purchased it again. The first purchase was the long option line, and the second one was the short option line swing trading strategy, and we sold it on the 27th. So if we take that one simply, so MMC, this long option line swing trading strategy consists of tracing your trend lines, your up trend lines, your long option lines, meaning they are longer than 1 year time frame, and then see the one that the stocks tend to touch base with on a regular basis, and pick those trend lines to be your entry point where you want to buy the stocks. When the stocks pull down to those trend lines and start going up, after a few confirmation that tells you that there is a big chance that it's not going to continue going down, is getting ready to start going up, you can buy some shares. And because we trade large cap stocks upward, large cap stocks, they tend to reach new high on a frankly, therefore we aim for our exit point where we are going to sell the stock to be the new high. So with that strategy in mind, when the stock pull back from a high, pull back to the lowest trend line that we have, you can see we have two that we selected. When they pull back to this trend line and start going up, after a few higher lows, you can see that this low, which is a red bar, is higher than this one, which is higher than this one, like the bottom of the rectangles of the red bar. The red bar just means the stocks dropped that day. The closing price was lower than the opening price, and the green bar, the closing price was higher than the opening price, so the price went up that day. So the pullback was higher than this one, which was higher than this one, and this one was higher than this one. So the first green bar after this pullback is where we wanted to buy, or the second one. So it seems like the second one was probably a green bar by the time we were placing the order, but that day, by the end of the day, it became a red bar. The price dropped that day. So we purchased it on that day around noon time, pretty much around the trend line, because you don't really buy at the trend line necessarily, but around it, because you want a confirmation that it start going up, so that it does not continue going down, and you will have purchased it early. So we bought it, and it went up, pulled back significantly there, and continued going up, and reached a new high here. So you can see that this is higher than this peak here. So it reached a new high there, and we sold it. In fact, it reached a new high few times before we sold it, and it went up a little bit, pulled back that day, and pulled back to this trend line. So when it pulled back to this trend line, we purchased it again, because we know that we have a trend line that is a little bit higher up that it tends to rest on as well. When they start from the lower trend line, it will go up and pull back to this trend line and continue. So therefore, we have this one that we are looking at, which is pretty much close to this one. So we will buy around this one or this one in our estimation. And then when it reached the new high and we sold it, and it pulled back to this trend line, we bought it again, and then it went up and reached another high, and we sold it. And as you can see, it continued to go higher, but we know that it can do that, or it can pull back to this trend line, or might pull back to something lower, but we'll prefer to wait and buy it again at this trend line. So that is pretty much how we combine the long up to long swing trading strategy with a short up to long swing trading strategy there. And from here to here, we can total those two return rates to see how much return we got there. And one thing I like to point out as well is we could have stayed in the trade from here all the way here, and the thing is, when it pull back to here, we'll have lost this profit there. But keep in mind that we purchase it back at a higher price as well, so those could have offset each other. But when it reached a new high here, is we compare the previous peak, to see how it reacted when it reached a peak, and we notice that when it reached a peak, it tends to fall back a little bit before going up again. So with that in mind, we decided to sell it and just buy it back again on this trend line. But if it's following the same pattern, when it reaches the lowest trend line, it tends to climb the mountain top for a while before it will pull back. So therefore, I assume it's going to have a long way again if it's repeating the same pattern before it will pull back. So we could have seen the trade for longer, but we just prefer to combine long up to long with the short one. But it is optional, it's entirely up to you. So if we combine those two, from January 22 to March 27, the return is 13.36%, and the profit in dollar amount now is this one, is 613.61, and the amount spent to make that, hold on, since this one is sold, I need to take this out of here. So is, hold on, I can total those two, but as you can see, we spent $5,400 to purchase the stock, and we sold it for $5,900, and then later we use a portion of it to buy it again. So technically it's the same amount, but we just keep using it to trade over and over and over. Does that make sense? So But those are just one example. We can look at this one that gave us 7.52, and with this strategy we do not purchase the stock in 1 month and sell it the same month necessarily, especially with long option and swing trading strategy. For this one, we purchased it on the 27th of January as well and sold it in March for 7% return. And those are single return, like a return per stocks. So for that one, we purchased it on this trend line here and we sold it there. But again, it continued to go up. And when it reached this line, it tend to go up for a while, but then tend to pull back to this line as well, as this secondary line, which maybe is like the upside wall of the mountain. When it's climbing the mountain up, it tend to rise on that midpoint line, and this is the valley. So it could have some way to go, but we sold it, so we'll wait to buy it again on this trend line. So we combine pretty much. In fact, this is the long option line as well, because it is, those lines are years on the x-axis. So those are two long option lines that is been consistently pulling back to. So we target those two to buy at. So now that we pull two examples to compare, let's go to our weekly return. See here, and that's something you can analyze as well if you want to analyze your weekly returns. Let me see what week 10. Okay, so from week 10 you can see the weekly return, and there are some week we didn't sell anything, because it's going to show you a return here if we sell a stock, because it's taking the sales minus the cost we pay for those stocks that we sold. And but that's March there, and you can track a daily return as well. And you can see that there are some days we didn't sell anything, and some days that we sold stocks and make profit on them. So you can see that we have very few sales in March. And even though we have very few sales in March, and most of the stocks that we sold in March, we purchased them in January or February, we made $2,400 on them. So daily purchases, you can see that we didn't purchase stocks on a daily basis either, which make this long option and swing trading strategy a little easier for people that have full-time job, because you do not trade on a daily basis, even when you are swing trading. But you can see that there are some days we didn't purchase anything, and there are some days that we purchase a lot, because some days there will be a lot of stocks on our watch list that will pull back to their trend lines and start going up from there. And there are some days that we won't buy anything because they are either continue going up or they are pulling back to the trend line but are not ready to start going up yet. Just to give you an idea that swing trading, you can swing trade with a full-time job. It's depending on the strategy you are using. You may not have to buy stocks every day, and you may not have to sell stocks every day. So you can see that we have few purchases in March, and if you want to look at how many times we sold stocks. We did those not on a regular or not on a daily basis either in March. Now as you can see, yeah, very few. So on that note, we can look at number of trades for the month of March. So we purchased stocks 15 times, and depending on some days, you can see we purchased 3 different stocks that day, and this one on the 20th we purchased 5 different stocks. And you can see the number of times we sold stocks. On the 3rd we sold stocks we sold 3 different stocks, if that makes sense. So and so forth. So 7 total stocks sold in March versus 15 stocks purchased in March. And we do have dividend income as well. And hold on, I think we can have the total of the dividend, because those stocks, some of them pay dividend. So $195.00 in dividend income. So we have our daily profits in by column here, and our weekly trade from week 10. You can see in week 10 stocks that we purchased, stocks that we sold, how much we pay for those specific stocks is what got pulled to the spreadsheet here. And we sold them, we bought them at that price, we sold them at this price. And again, not necessarily purchase it in the month we sold them, and the fee that we pay for it, the profit from those are the difference between those two numbers, and the profit rates on it, which is just taking the profit divided by the cost here. It should have taken the fee into consideration, but it didn't. Like for instance, let me do it again. Because it's pulling it from elsewhere there, but yeah, and the profit took the fee into consideration, but I think the base should have taken it into consideration as well, but the fee is small. But that just because we are taking the cost into consideration. Yeah, I'll have expect this fee to be included in the denominator as well as the sum of that and the fee. But yeah, so week 11 we have 2.32% return there. Week 12 we have 11.24%, and week 13 we have 3.71%. So those are the weekly return commitment at the one that we have not sold yet. We purchased but we have not sold yet. And we have our monthly trade, and our monthly trade for the month of March, we made $2,400, but we purchased stocks for $37,000 and sold it for $40,000 with that fee, to make 6.39% return on it. Again, in March we made $2,400, but we spent $37,000 to be able to make that $2,400, and that is the main lesson here. Yes, we made $2,400, but we didn't spend $100 to make that. It's not get rich quick strategy. So we spent quite a bit of money, buying stocks and selling them to make that profit. And we saw one way of calculating the weekly return, and I like that way better. And we have some different ways of calculating it here. As of year to date, this is using a capital invested, not necessarily how much we spend to buy the stocks. And this one is using what we bought this month and sold this month. And again, it does not really have a good reflection of what the strategy we are using. So, but I would prefer that to be stocks that we sold this year minus their cost to find the profit divided by their cost, if that makes sense. Because there are stocks that we are selling in 2025 that we purchased in 2024. But again, it depends on the strategy. You have different ways to calculate your return. So we can compare those returns so far. So in 2024, when we did our swing trading for the first time, that was the profit. And as of year to date, we have 5,700 there. But I think that's pretty much the different type of return we would like to go through. Let me see what I'm okay. So pretty much, yeah, just trying to compare the different, let me see, the different the monthly return to the previous year, if that's something we want to compare as well. But pretty much, we prefer to just compare what we are doing to how we did it previous year. And because we used two different strategy, last year we used short up to long swing trading strategy, and this year we are using long up to long swing trading strategy. So we just want to to see how we are doing with those two strategy. And the capital is about the same, because this year, contrary to what I planned, we are not really depositing money in the account, at least not yet. So we are still using what we have there and plus profit that we made from last year. But so pretty much the same capital, but we can just compare how we are doing this year compared to last year. And on that note, we can compare I'm trying to save it, so it's going to take a few seconds. But here is the position of our account, just to show you that there are stocks that we purchased that we have not sold yet, and the one that I highlighted are stocks that we purchased for swing trading purposes, either this year 2025 or last year 2024. The one we didn't highlight it, we purchased them in 2023 for dividend income purposes. So in 2023 we used a different strategy to purchase stock using 52 weeks low and 52 weeks high strategy. And that is a strategy that I like, and I like to fine tune it with what I'm learning from swing trading strategy. And I'm using a few things from that 52 weeks low and 52 weeks high strategy to implement with my swing trading strategy as well. So when you are learning a strategy, just my view, if you have some prior knowledge of different strategy, you can see if you can pull some useful information or tips from them, to customize the strategy you like to use, that you are using, that you like to customize it to your liking. But as you can see, there's a lot of stocks that we purchase that are negative in our account, so we'll wait for them to become positive before we sell them, because again, we don't like to sell at a loss. Therefore, we just prefer to hold on to it, to use that strategy where you purchase stocks and you are not selling it at loss when it pull down, like you buy it and then the price drop. It's good to take time to create your watch list of stocks to swing trade from, to include stocks that are good stocks that you could have invest in long term and swing trade them. They may not be stocks that you'll make a lot of profit on very quickly in a short period of time, but at the same time, they are not stocks you will lose a lot of money on in a short period of time either. So they are kind of stable. That's why I pick large cap stocks. So if you are a beginner swing trader, you can try large cap stocks, and then when you are you customize your strategy and you find those stocks that react well with your strategy. You have your watch list of them. Then you can move to other cap stocks as well to have watch list of them as well. But just to give you an idea that, and then we have some stocks that are doing well, but we are not selling them yet because our exit point is now reached yet. And as you can see, this is Clorox. So we have been tracking it and we wanted to buy at this short line. But then I noticed that when it reached this resistant line, last year we traded using short option and swing trading strategy, and then it pulled back. So it pulled back for a while, and I noticed that it rested on this trend line and started going up from there. So it went up and pulled back, and then we got in. And so technically, I'm hoping it's going to reach a new high before we sell it. So for that reason, I'm in the trade. But it's not going to just continue going up like that. It might continue to do the zigzag along the way, I will assume. Who knows? I don't know if it decided to continue going down or if it's going to just rest here and go up from there. And that's why it's positive, but we have it in the account and we just leave it alone for the time being. Just to give you an idea that yes, even though we sold some stocks at profit, there are stocks that have losses in them, and we just keep them in the account until they become positive before we sell them when it reach our exit point. So this conclude a realistic monthly return on swing trading for the month of March 2025. We thank you very much for your time. If you like to swing trade, I will suggest you start small, even one share at a time is fine. And you can notice that there was when I use the short option on swing trading strategy for MMC. The second time that I purchased it, I only purchased few share of it. I purchased 10 share, but again, when you start, you can just buy one share at a time. With this strategy, for instance, long option and swing trading strategy, when you buy at a support line or the valley going up, and you are selling it at the tip of the mountain after the new high is reached with those long option, with those upward large cap stocks where a new high is frequently reached, you'll make some profit on it. Not a lot of profit, you'll make some profit. But then you keep repeating the process until you master the strategy you are using. You customize it to your liking, including some risk based on how much risk you are willing to take in it. And then when you are very comfortable with your strategy and you have stock on your watch list that reacts well with that strategy, just now you know that to increase your profit, you just need to increase the number of stocks you are buying. So just start small until you are comfortable with the list you created, the list, the stock that you pick to swing trade, and the strategy you are using, they all align with each other, and then you can just buy more share from there, to increase your profit slowly, so that over time how much you are making from swing trade is higher than how much you need for your monthly expenses, and then later higher than how much you are making from your full-time job. So it's just one way to make money, one more streams of income. So thank you so much for your time. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money, just as small. For more of swing trading related videos, will you please check the playlist in the video description for the links. And we have one playlist specifically for tips on how you can pick and analyze stocks that are good to add to your watch list. So we have a playlist for that as well. Do you swing trade? Which strategy do you use? Will you please share your answer with us in the comments? Thank you.